statement, to David's point, leaving all doors open to either no more rate hikes to rate cuts. I think they want to leave a lot of flexibility here, given the fact that there's so much uncertainty.
All right, well, we will see in about 20 seconds what the story actually is. Let the record show that John Bellows says today's statement is going to be largely about banking stability more than about monetary policy, but we're certainly going to hear about that and inflation in just a few seconds' time. Steve Leisman is waiting for the top of the hour, as are we, and it is here right now. Steve.
The Federal Reserve raising by 1/4 point, by 25 basis points to a new range of 4.75 to 5%. It is the 9th hike in a row since the Fed began hiking in May 2022. The Fed providing some guidance saying additional policy firming may be appropriate. That's perhaps a bit of a downgrade from what they said last time, where they said ongoing increases in the policy rate may be appropriate. Now they're saying additional firming. We'll have to talk what that means. Now, they said recent developments, which seems like a euphemism perhaps for the recent turmoil in the bank market. They said recent developments are likely to result in tighter credit conditions for households and businesses. Those tighter credit conditions will weigh on economic activity, hiring, and inflation. The extent of these effects, however, is uncertain. Now, they left unchanged their year-end projection for the funds rate at 5.13%, which suggests they believe they'll be hiking at least one more quarter point and then be done. They raised next year's funds rate projection to 4.3%, which you'll notice is below the projection for the year-end. So there are some cuts built in by the Fed next year, but a little bit less than there had been before. They forecast a bit more inflation this year at 3.6 versus 3.5 for the core PCE. They said inflation remains elevated. Remember last time they said it had eased somewhat. That was gone from this particular statement. They said the U.S. banking system remains sound and resilient. On the economy, modest growth in spending and production, they've noted. Job gains have picked up and running at a robust pace. Guys, the one thing I'll notice from this thing is first the change in language for some additional firming may be appropriate. The other thing is almost no connection at all from their comments about the impact of tighter credit to the effects on the economy with policy, except for that little squishy language about what happens next. Kelly?
All right, Steve, thank you. Stick around. We have the markets shooting higher in response to this. But as we know, we get the kind of post-2 p.m. reaction, and then we get the Fed press conference reaction, then we get the closing bell reaction, and then we get the rest of the week. And by the way, Powell doesn't have a great track record for risk assets in that regard. But right now, the complex looks positive. The NASDAQ is up 0.5%. The Dow is up about 26 points. A similar move for the S&P 500 as well. Let's bring back our panel. Bob Bassani, Rick Santelli, watching the market action for us. Rick, let's start with you. What do you see in the 10s, 2s, and everywhere else?
2s and 10s dropped rather dramatically. 2s especially dramatically. We dropped to 393, and then it popped up to over 4%. On the 10-year note, I saw the market get very close to kind of 348, 349 area before it popped just a bit. The dollar index did the same thing. It dropped a bit. So what are we looking at in macro simple terms? We're looking at interest rates moving lower across the curve. We're looking at equities, and I'm sure Bob will get to that in a minute, not looking too badly. Everybody, of course, is monitoring what's going to happen with the next set of...
Welcome, welcome, welcome. We are back. Get some music going. Had some difficulties starting the stream, but I think it's good now, of course. Like, I try to go live right at 2 o'clock for the Fed decision, and I missed it by like 2 minutes. We're here, and 25 basis point move. Market seeing a pretty decent reaction. I mean, it was a very, very slow day up until this news, and 30 seconds left in this 5-minute candle. So, session highs, pretty much. Why is my thing all messed up? There we go. And yeah, let me just extend this out a little bit. I've had this wedge drawn on my 1-hour chart for some time now. But really, you're testing 400. That's probably the big level. You can see that yellow zone on my chart for the SPY. And I have some allergies right now, so I'm going to be like sniffing a lot. And right now we have that 5-minute candle closed for the SPY. If we go over to the 15-minute chart, hidden bullish divergence is developing. Even new highs right now, still going higher, pushing up and up. Let's go over to the 4-hour chart, kind of zoom out a little bit. And this is really what I want to focus on for right now, okay? On the 4-hour chart, I have this large descending broadening wedge drawn out. And if this move holds, if we continue to break out right here, that's a pretty nice move. That's kind of going to be your third higher low in a row. This is a continuation pattern. We'll see. We're still going higher off of that news. This is a very big breakout test that's being tested right now on the 4-hour for the SPY. On the daily, I have it drawn a little bit differently where you're not quite broken out yet, but we will see. And yeah, pretty crazy move so far, but it was a very big decision at the end of the day. Even though I feel like a lot of people expected 25, you're still seeing almost a 1% move just in 6 minutes since that news came out on the S&P 500. So if you were in calls, congratulations. If you were not, there's always the next one. But starting to see some other names moving. Let's take a look at Amazon. I don't know why my trading view, it's not showing me. There we go. Amazon session highs, Apple session highs, Nvidia's up 5% today. Same for AMD. Both of those are sitting at session highs. Had a little ascending triangle breakout over here for AMD. Yeah, across the board, nice moves. I'm gonna blow my nose. I'll be right back. We can watch SPY chart.
Gotta get back for dinner.
All right, hopefully I'm good now. But yeah, we're gonna do the normal stream rundown too. I just wanted to start with this because it was a very big decision. What's going on? AK Plebere, DJ Tardis, Frank Tink in the chat, and starting to slow down a little bit on the SPY. Let's take a look at the Qs right now. Pretty much the same thing here. Let's see. From the pre-FOMC to the top, you made about exactly a 1% move. You're pulling back a little bit on this candle currently. We're going to do a rundown on like how all of the indices are looking in a second here. Let's go over to the Discord. On the Discord, links in the description, make sure to join that. And quite the rejection candle currently. I do have a little bit of a delay on the stream because I can't stream the market while it's open, or like real-time data. So like I said, if you just joined in, it's very, very important for this move to hold if you want to break out on the 4-hour time frame from this large descending broadening wedge we've been in for almost 2 months, about a month and a half. And right now you're testing a breakout after a pretty good rally over the last couple of weeks. But this is your short-term like make or break area that for continuation, you want to see this breakout. I mean, the textbook move, if this does confirm, would be a move back up to the top of the pattern at least. And again, kind of have like that 3 rising valleys taking place over here, 2 higher lows, 3 higher lows in a row now, 2 higher highs. So this, a lot of good could come out of this breakout, but it needs to confirm first. And we're still just chopping around a little bit after that initial spike up. You did just print kind of a shooting star candle, even though, again, it's really doesn't mean much to look at like candle patterns, at least for the first 4 or 5 candles right after an FOMC. You're just kind of moving on news, and then we can see what happens. I believe there should be a press conference in like 20 minutes. Where's Wednesday? Yeah, in 20 minutes there should be a Powell press conference, so we'll see what he says there. And yeah, I think we'll get started with like the regular stuff. I'm gonna set up alerts just in case we put in a new high, or if we give up that FOMC low. And until then, you're just pretty much within about a 1% range on the SPY intraday. So I'm not trading this personally. I'm just watching from the sidelines. It could have went either way. I'm just waiting to see kind of how we start to confirm candles on higher time frames. But that's pretty much it for right now with what took place in FOMC. Nothing too crazy, but things have been going on across the board. So let's get started. I'm going to be starting off with crypto. Then I'm going to be going into the stock market, my overall opinions on how things look right now. And I will talk about individual names as well. If you're not in the Discord, GameStop alerted yesterday, already ran about 50%. Very nice, easy, crazy swing. So we'll talk about that and maybe some other names that relate to it. So let's get started with crypto. Bitcoin. I alerted this swing on Bitcoin literally at the exact start of this run. Pretty much January 8th, 9th, somewhere around there. We could actually find the exact date. It was January 10th. So on January 10th, I alerted this Bitcoin swing, and that final target, you see it up right over here. Bitcoin is now at that final target in about a month and a half. So that's a 65% gain. All the targets of the Bitcoin swing were achieved. The reason that the final target of the Bitcoin swing was right here was because you can see all of these major lows from 2021 and even kind of last summer were at this level, so it could act as a resistance. If it does not, then the next level I have probably would be just above 30K. You can see a couple of lows over here as well. But this was a very nice move. It kind of created this range between like 21.5 and 25K for some time. And then it just ran right down to the 200-day moving average. It just missed it so much. It tapped that 200-day moving average and then pretty much went right from the first target all the way up until the final target in like 2 weeks. So really nice move currently on Bitcoin. I guess to also highlight that inverse head and shoulders look to it. So that's really it for the daily time frame. If we go over to the weekly, now we're really starting to see the thing that I was talking about for probably about one whole entire year playing out, which was not only this bullish cipher harmonic pattern, but also this wedge breakout. It took time. Remember, it was a weekly chart. Weekly charts can take a lot of time to play out, and it did. So now you pretty much made your move up to the B point of that harmonic, which could be acted as like a first textbook target. And yeah, the technicals are playing out. It didn't seem like they were for some time. The wedge had to be redrawn a few times, and that's how it goes when you're in such a steep downtrend. But the harmonic played out, the back test of previous resistances played out, and now here we are. We'll see how that run continues. Ethereum also, I put out a swing on this. It's been a lot slower, but it is up a cool 34% since that alert. And what's really important to me here on Ethereum is not only the break above 1700, but the break and the back test. You can see you broke above this 1700 resistance level, and you spent the last week flipping that into a support. If that holds, that could be big. That's really it for crypto. Let's talk about what's going on in other markets. You have the US 10-year. And before I kind of took this 2-week break from streaming, I was talking about how this looked like an area where you could see a rejection and the market could kind of rally off of that. But you could reject on the US 10-year. I also talked about a potential rejection for the dollar currency index, and then that could help the market rally. Now, like days before my last stream, what happened was you had a little bit of a fake breakout, and I was flip-flopping a little bit because it did look like you were breaking above this resistance. But we were still talking about on the 4-hour chart, this upsloping channel that despite the fact that you broke above this resistance and we're trying to backtest it, you still broke down from this upsloping channel you were in since the beginning of February on the US 10-year. And now you can see I've come back now and it pretty much played out. So despite a small fake out, the overall move did happen and you pretty much came back down to the 3.35 support level, which has been your lows really since last December. You also kind of are chopping around the 200-day moving average. And I'm not saying that you back tested this wedge because the wedge already played out, but you did at least flip that previous supply line into a demand line for right now. So at this point, you do have a nice bullish pin bar off the lows. You're trying to reclaim the 200-day moving average. it does look a little bit better. I think the bigger picture here is whether or not this can hold 3.3% or not. That's really what it comes down to on the US 10-year. You can see these have been the lows the whole entire year, 3.3%. It's holding for right now. We will see. Crude oil broke down from that triangle pattern. It's been kind of dead cat bouncing a little bit off of this bullish hammer candle over here. And the reason I say dead cat bounce is because it's not been much of a bounce. It's been very quick. But at the same time, that does somewhat line up with some lows from not last December, 2021 December. So not a lot of data here right now. It's just kind of bouncing after a large drop. Kind of need to wait for a pattern there. Energy gave up the handle for the cup and handle, but it is trying to reclaim this $78 zone, which is pretty important. And then very quickly before we head back into stocks, gold, that wedge playing out very, very nicely. Silver somehow was able to reclaim, like this whole entire area on silver was very, very important historically. It's back above it for right now, and what it's really doing at this point is retesting this little range low from January as resistance. And then finally, the dollar currency index, right? 105.75. I haven't touched this chart in a very long time. That was the resistance level I was looking at. You rejected that, and now you're heading lower. So that's really it for other markets. Just a quick look at the Chinese stock market. This does look very interesting. You've got this down sloping channel here, potential like inverse head and shoulders look to it, testing the 200-day moving average. Also some hidden bullish divergence on the RSI. I'm not sure why the MACD is not showing up, but holding above this little blue zone right under here, around 18.3K could be very key. I don't know how Chinese stocks are looking right now, but we can take a very quick look. BABA, actually one name, a couple premium members brought this to my attention yesterday. BABA is showing some interesting variables. It's only up 1% today, but if you see over here on the daily, you've got this massive potential inverse head and shoulders. You've also got this like down sloping channel breakout. MACD just flipped over to green. If we go over to the weekly chart over here, potential for hidden bullish divergence. It's a pretty interesting chart. I think really these are the two big levels for BABA on the weekly chart. It's kind of back in this range. It was really always in this range apart from like the 2017 to COVID crash bubble run. And now it might start to curl here. You also are working on a bullish engulfing on the weekly. You still got 2 days left. We'll see. But if it does start curling here, that could set up the move to at least test the breakout at 125-ish eventually, which would be interesting. Another Chinese name, Neo, bounced off of that 838 level. If we go back in time, you can see that this lines up with some resistance from 2018. So maybe it's kind of trying to double bottom here on the daily with classic bullish divergence also. Got a little bit of a wedge breakout on this one. There you go. And then finally XPEV. This was sent to premium members yesterday in the weekly watch list. Triple classic bullish divergence, down sloping channel. Not perfect, but very close to filling this gap up from November 30th. And right now you're getting close to testing a breakout of this down sloping channel. Kind of like a double bottom on very high time frames as well. Here you can see it over here, like a higher low double bottom. And that's it for other markets. Let's talk about what's going on in stocks right now. Let's go back down to the low time frames and see how we're moving post FOMC. Looks like you spiked up and now you kind of came back down to around the same price that you were at before the news. You're getting a small bounce off the VWAP right now. Intraday volume is declining, and Powell should start speaking in about 10 minutes or so. All right, so I kind of already talked about what's going on with the SPY. Really do zoom out over here. Let me just clear this all up for 1 second. If we just look at it like this, you just draw out that trend line. Okay, you can see we rejected this trend line every single time we tested it during this bear market. However, for the first time ever in this trend line's history since pretty much the last year, you have actually used this line as a support and not a resistance. You tried to do it over here, but you were not able to hold it. Now you can safely say that this is a support. It's your demand line now. So you have actually back tested the breakout of this descending broadening wedge. You got a breakout and a back test. You are making higher highs and higher lows on the daily. Midterm, we are in a bull market. I don't care what your favorite person on CNBC says, or your favorite hedge fund manager says. Just in the simple fact that you are making higher highs and higher lows, that means you are in an uptrend currently. the other simple fact that you did break out of this pattern that so many other people are looking at as well. At least for the midterm, for the past month, you are seeing a short-term bullish market. I'm not saying we're not going to make new lows. I'm not saying the overall bear market's lower. I'm not saying no recession. All I'm saying is for right now, we are seeing the market move like it is, at least for right now in the short term, midterm, in a bull market. We are seeing a bullish trend. So the trend for shorter term traders is in your favor to the upside. And you are also seeing that line up with the 200-day moving average. So again, just like that trend line was resistance, so was this yellow line, the 200-day moving average. That's now your support. You have not seen that in the last year. Honestly, you've not seen the active support since the COVID crash. The last time you actually saw the S&P 500 test and use the 200-day moving average as a strong support off of a major swing low on a daily chart was right after the COVID crash. That was the last time, because you never really tested it during that run after COVID. You just didn't. You just kind of floated away from it. So there are the variables there. If I put all those other crayons back onto my chart right now, you can also see again this shorter term flag pattern, which lines up with everything. And also I do like how you are now back above this blue zone I have charted out over here. So at this point, right, let's say if we want to look at this a little bit differently now too. Okay, let's delete everything one more time and let's look at it like this. We're going to use all of this as a resistance zone right up here at the top, and then we draw this, and you could put it here, you could put it here. I'm just going to put it here, and this. You've got a nice looking, it's not super parallel, but at least now because of this latest rally, because you really couldn't call it an inverse head and shoulders over here, you did not have a well-defined neckline. But now because of this rally to this point, I would say you could start to call this a potential inverse head and shoulders on the daily for the SPY. Again, in the last year we've seen a bear market. Over the last decade we've seen a bull market, and all we are doing is making a common retrace, right? If we go from the COVID crash low to all-time highs on the SPY, you made a perfect 50% retrace, and now you are once again developing bullish patterns. Whether you want to look at it as an inverse head and shoulders, whether you want to look at it as a descending broadening wedge, however you want to look at it, you are seeing different bullish patterns. So midterm, I don't really see much that shows me bearishness. I just don't on higher time frames. Most things look good to me. I don't know. I'm not the person to tell you if the fundamentals align with that or not. I have seen what's been going on with the banks lately. I've talked about my views on how the Fed handled inflation many times on the stream before. I'm not here to talk about the fundamentals. I'm just showing you what I'm seeing on the charts. The only thing that I will say kind of does go against this is if we go over to the weekly chart right over here. Let me delete this for a second. And then we just look at it like this. This is probably the other way that it could be perceived at. If you are a bear, this would probably be the only pattern I could give you right now for the market, which would pretty much be this bear flag over here. And right now you have to hope, if you're bearish, that this is pretty close to your short-term top, because then you could get a bear flag break down, retest, and then move. Like a break hook can go but to the downside. It looks something like this. That's what it'll look like. But you'd have to pretty much reject that previous demand line as a supply line like within the next week or two. So now you can see how much of a critical area we are at on higher time frames. The 1 hour chart, again, I kind of had this bear flag drawn out. I've had it drawn out all week. You could break above it. I think that's really what's key over here, like I said on the 4 hour chart, to try and get above this descending broadening wedge. We will see. There are a couple of bearish points that could be made. I'm not saying everything is just bullish, but in my opinion, when you go over to the daily, there are more bullish technical than bearish technical variables at play right now, and that's really just the only way that I can put it. I don't see a bearish daily pattern unless you want to really use that bear flag and retest, but you can only really consider that after the move happens. So that's really it for the SPY. Then we have the Qs, and this is very important to me. The area in which the Qs are testing right now is very big. It already had a nice little descending broadening wedge breakout off the 200-day moving average. It already reclaimed this zone from 297 to 303. You can see that used to be support and resistance in the past. You're back above it now. And now you are back within these two levels. You were just here in the beginning of the year, and unfortunately you gave it up to the downside. But you've now fought to get back within these two levels. And if we really delete all this for 1 second, I just put a simple line right over here. You can see that the Qs, apart from this little move last August, have not been able to hold above this resistance level since it broke it about a year ago. And again, just like I drew it out on the S&P 500, you could draw it out over here. How are you running up into this resistance with a potential inverse head and shoulders on the daily? That dip we saw in February, that pullback we saw in February, really did set up the right shoulder of a potential inverse head and shoulders on the market. And now you're getting to the point where you're retesting a breakout. So this is really your key area. Like, this is the level in which you've already gotten a back test now. You've gotten more bullish patterns now. If we're going to switch out of this bear market for at least a couple of months, I think this would be the area in which you would see at least that initial breakaway from the price action zone that we were chopping in for the last year, right? Because you had your initial move down for Q1 and like a good amount of Q2 in 2022. But for Q3 and Q4 2022, you kind of just went sideways on most markets. You didn't really continue the sell-off lower. You just kind of started consolidating, right? So there are different ways to look at this. What if you look at this like Wyckoff accumulation, right? Where you have a spring over here. I know it's not really perfectly linear with the phases. A little bit of an up thrust over here. And now you are kind of seeing a sign of strength. You see the volume rising into this breakout, at least for the most part, not in the last few days. You never really got back down to retest this support, which is kind of a sign of phase D and Wyckoff accumulation. So different areas of technical analysis kind of do support this, but I think on a very basic level, the biggest thing here, the largest thing over here, is this, the 200-day moving average. A lot of funds, big money that do not give about technical analysis, one of the only things they will use is the 200-day moving average. There are stock brokerages where they won't tell you anything about technicals, but literally under the stock, it'll literally just say above or below the 200-day moving average. A lot of the 200-day moving average is very important, not just for the actual technical itself, but just by the amount of people looking at that and trading based off whether you were above or below that level. That's it. So that's really what the Qs look like right now. Let me put everything back on the chart. On lower time frames, it's not too different either. To me, this is like one larger rounding bottom. That's really it. And then let's move on to small caps really quickly. This is the one, in my opinion, which has not shown me what the Qs and the SPY has. You've seen that nice little breakout on the daily for the Qs. You see this SPY breakout getting close to tested and the larger breakout. The Russell 2000 just has not been doing the same. You know, I think at this point, this could really just be looked at as a range. Kind of between, let's see. Kind of between, like, pretty much the bottom of the range would be like 163, which used to be highest pre-COVID crash. And then the top of this range is around like 204. So this whole entire area over here has just kind of been one big range for the Russell 2000. And the difference between this range and the range that I just showed you on the Qs and maybe even the SPY is the Qs and the SPY in the last month or so, or at least last couple of weeks, have worked their way up to about over here. The Russell is not. It has not seen this rally that the larger indices have seen, and it is really starting to underperform. Where the QQQ and the SPY are above the 200-day moving average, the Russell 2000 is below the 200-day moving average. So I don't know, you are starting to see this larger disconnect. This reminds me kind of 2021 when you kind of just saw the SPY and the Qs continue to run, but the Russell just went sideways in this range. You're seeing this disconnect once again, which I don't know if you can use as a sign for the overall market that maybe money is just kind of moving and rotating back into large cap names again when you see names like Tesla, Google, Amazon, Apple really starting to run, especially Nvidia, which is almost back to all-time highs, which is crazy to hear. Maybe that money is just kind of moving only into those names, which at least for the last decade were the safer, more progressive names, but you're just not seeing the same type of price action on the Russell right now. You know, this kind of looks like a bear pen and a bear flag. I don't know. I think until this really does break above 188 and holds it, it's just hard for me to get a good opinion on it, because like even like this, right, it just looks like one huge bear flag that you just broke down from. So I don't know if it's possible. I guess it is possible, but we just haven't seen it. Like, I don't know, is it possible that the Russell 2000, if we're just talking about the charts right now, turns into a bear market for again the next year and just continues going lower because of this bear flag, but then the SPY and the QQQ run back to all-time highs? I don't know if that much of a disconnect is possible, but at least for the time being, they're just not showing the same variables at all, which is why I've kind of stepped a little bit away from small caps. I'm sure some people who have more experience in the markets can talk more about how like maybe small cap sectors took a lot more time to come back around after a bear market compared to the large cap sectors. But to me, there just is not the same price action showing up over here. The ARK ETF, however, a little bit more mid cap, a little bit more growth stocks, is good from a technical standpoint on the daily, at least for right now. So if I would just have to use the word good and bad, which again, that's not financial advice, I'm not saying that it's going to go up or down for sure. If I'm just trying to give you a summary of everything I'm talking about, just based on patterns, lines on charts, I'd say Russell, bad, SPY, good, QQQ, good, ARK, good. Hidden bullish divergence, wedge breakout, testing a 200-day moving average breakout as we speak. And I think $41 is the big level. That's really the key level over here. It was resistance last October, last November. It was resistance at the beginning of this month. If you break that level, 45.48 is kind of the next one, and then $52. So this is almost your fourth or fifth bounce off of this zone, which dates back to 2020 and 2019. If you can continue to hold it, it's good. It's good as long as it holds it. It could be bad if it breaks it. That's really it. So that's really it for what I'm seeing in the market right now. The VIX had a nice little bounce off the bottom of this range, but it's now kind of given up the 200-day moving average very quickly. And that is really it for what is going on in the stock market overall. I'm going to look into a bunch of individual names now. All right, we're going to get started with GameStop, which is currently sitting up at 40%. If you didn't know, I've been away for the last week and a half or so. And GameStop is pretty much the first public swing I alerted when I came back yesterday. I mean, GameStop and Ford, you can see them right over here. So GameStop, Ford yesterday, 3:21 p.m., 40 minutes before the close. GameStop, it was down at $17.81 at that alert. Earnings came out, obviously that helped out, and boom. Already 3 out of the 4 targets have been achieved. That third target was 48%. It pretty much went right up to the 200-day moving average, and now it's pulled back, pretty much trying to flip that $24 level, which I did chart when I put it out. You could see that was support back in like last October. It's trying to flip that into a support again, I guess. But the majority of what I wanted and what I was hoping for is played out at this point. 3 out of 4 targets achieved. That 4 target is very aggressive. It's a 100% gain. So we'll see. I mean, you see this low from last or 2021 August. That's kind of what I'm looking at for that one, even somewhat this high, even though it's a bit above it, but that simple. You had a wedge, you had classic bullish divergence, and a back test on the 4-hour. And really what sealed the deal to me was this double bottom over here at the PCC of this bullish shark, but also on the weekly chart, look at what it's doing. And I did share this in Premium yesterday. Let's see if I can find it. Here we go. So GME second low at Shark PCC. Now you can see it was just under $18 in, and 2 lows at the same exact price point. That's why I put the stop. As you can see, let's go back over to the daily time frame. The stop was placed right under those lows. That was it. If it failed, it was right under those lows. That was it. But it's all the way up here now, and just going back up, you can see Gold Miner did a pretty good job of this. Literally yesterday at 11:30, before I even said anything, anyone charted GME or AMC recently, feeling a meme rally coming soon again, and the charts look perky to me. And I took a look at them, and yeah, the variables were there. AMC just didn't look as good to me as GameStop did, but we can take a look at AMC right now. See if that's moved some because of GameStop. It's up about 4%. And to me, you know, I like how it did fill this gap over here, where that line is. It's good that that's filled. Now you don't really have any major gaps in this area for a while, but the big zone to me here is around like $5. You can see this low, these highs over here, this low, this low. I would like to see a reclaim $5. That's really it. Apart from that, yeah, it still has variables just like GameStop on the weekly. It also has this wedge breakout and back test, and again, Most people want to ignore stuff like this, right? Because like, oh, you break out of the wedge on the weekly and then you do nothing. But again, it's a weekly chart. It takes patience. What happens if you are patient with the weekly wedge that literally takes you from all-time highs down to like an 80% retrace? This same exact thing happened to Bitcoin. And I'm not saying Bitcoin and AMC are the same exact thing. They're very different. But this is a very good example of how that could potentially play out with patience. All right. I just had an alert go off. Let's see. SPY. We're going to come back to those individual names in a second. But right now the market is starting to pull back some after FOMC. Looks like Powell just probably started speaking as well. And you can see we're consolidating, creating like a very small little triangle pattern here post FOMC. And now you're kind of breaking down from that on low time frames and also giving up the VWAP intraday. Still have 4 minutes left in this candle, but you are starting to see a little bit of a flush take place. Which again, this is not what I want to see, because what were we just doing on the 4 hour testing that breakout? That's why I said gotta wait to see if it can confirm. It was a nice initial move, but it's nothing confirmed for right now. All right. But like I said, 1 hour bear flag, you kind of hit the top of that. I did redraw it live on the stream. Now you're rejecting that, and I'm not trying to flip-flop back and forth based on the price action. It's just at least on the lower time frames, both of those variables were there. On one hand, you did not confirm the breakout, you were only testing it. On the other hand, you still do have this bear flag. So again, the lower time frames look a little bit scary. I wouldn't use scary as the right word, but the lower time frames have like some bearish variables short term that are kind of not allowing it to break out on top of the news potentially. But I do stand by most of the things I did say on the daily, talking about the 200-day moving average, this wedge back test, the inverse head and shoulders. So I'm not saying it's all going to happen right now. We still have to see if we can even break out on the 4 hour. Also, we need to see how that 1 hour flag plays out. This is something I've been sharing in premium for probably almost a week now. I started showing this bear flag like down over here. So we'll see. But what I want to see happen is this, obviously. That's what I want to see happen. But you might have to pull back first. I don't know. Back over to the 5 minute. Getting a little bit of a wick off of this zone I have drawn out. You can see this was resistance yesterday. Flipped into support today. Getting a very nice bounce off of that. I didn't touch this chart. You all saw that 397.44 level was charted. It was a low at 105. It was the low on this candle. I didn't even chart that today. I don't even really remember where it's from. But it's just one of my levels on my charts. And now you're starting to see a very, very big wick off that. I'm sure Powell must have said something. So now I'm going to reset this alert to just under that low, and we will continue with the talk about other names. All right, so that was GameStop and AMC. We have the older swings that I alerted. They both got stop hunted, but I was on vacation. I didn't really say much about them, so I just kind of let them ride. To me, at this point, Square still has the look of a cup and handle to it. I like how it bounced off the 200-day moving average. It's just a question of can it break out or not. And then Chewy, it's all about can it hold this demand line. This really never... It tested the stop, but it never closed beneath it, so it's still completely active. But I would like to see this start to move off the demand line, just like it did every other time that it tested it, and stay above the 200-day moving average. But we will see earnings according to TradingView are today, so please keep that in mind. And then finally, the other new one I alerted yesterday alongside GameStop, which unfortunately did not hit multiple targets the same day, is Ford. And what I'm looking at over here is classic bullish divergence on the MACD. 4 major bottoms off of $11. The bottom of this triangle pattern, but also this level dates back to these lows from May of 2021. Also some more lows from 2017, 2016. I'm not sure if there's anything else, but you can see that's such an important historical level. They've now just bounced off of 4 times. So that's really what I'm watching on Ford. It is slightly in profit. It's up like 0.5% today. We'll see what happens with that. And that's really it. I did alert some swings in premium while I was on vacation. I alerted Tesla, which is up about 10% since I alerted it. Change that song. It's up about 10% since I alerted it. I'm watching that inverse head and shoulders, and as of today, confirmed hidden bullish divergence. I also alerted Google in premium on vacation. This pretty much just hit the first target. I alerted this right when I broke out over here from this down sloping channel, and it's pretty much at the first target now. Pretty much a winning swing trade, up about 11-12% since the alert. I think last week I probably alerted this on maybe the 10th. I probably alerted this on March 10th. About 12 days ago is when I alerted this Google swing in premium. So that's almost at the first target as we speak. Pretty nice move there. And that's really it for the swings. We've got other large cap names. Apple. If we go over to the 4-hour chart, I shared this on Twitter multiple times. We talked about this on stream multiple times. The cup and handle did just break out for Apple. You've got Meta, which is curling up to new highs. Got some resistance just under $210 historically. Any other big names? Nvidia's been running almost back to all-time highs. Didn't even think about this gap, but this was a major gap fill at 258. It just ran right past it. And this all started, and I actually did alert call options and premium like right around over here. It all started off of that right angled descending Browning wedge breakout. I guess it even developed a little bit of a inverse head and shoulders in that too, but just to look at this in hindsight, what a move. I mean, you have an inverse head and shoulders, right angle descending Browning wedge, and then you break it and then you run. Very, very impressive move for Nvidia. Even AMD's been on a very nice move as well. This was, I can't remember if this was a premium or a non-premium swing, but it hit all the targets, which is nice. At this point, it does have not a lot of resistance until like 110. If it can continue to hold above these highs from January of 2021. So not bad. And then just for the classics, Fisker, it's retesting all-time lows. There's really no other way to put it. It's a question of, can you double bottom at all-time lows, or if you don't, make new all-time lows. It did just fill this gap over here though, because you did gap up on earnings. So you have now filled that earnings gap up. So this is the area where I'm hoping it's going to curl, because if it doesn't hold this, then you don't really have a horizontal support beneath. But my fundamental views are the same. And then clov, also very similarly testing a potential double bottom at all-time lows. But you know, Fisker is a little bit different. In my opinion, clov is just, we've talked about this multiple times on stream. I'll still talk about it. I'll still look at it as much as all of you want me to. It's just really since about somewhere over here, technicals just have not mattered much unless this double bottom really does start to curl. We'll see, but only time will tell. And that's really what's going on for the most part in the market. I hope I did a decent job of explaining what's been going on during my absence. Now you can see a very, very quick change in the SPY from dropping down all the way into this zone. Just in the last 10 minutes, right off that level, you've bounced up almost 1%. Hopefully now that 4-hour chart looks like a breakout test again. And this is a crazy part about FOMC days. It's like, literally you heard me 5 minutes ago, like, oh man, I don't know about that 4-hour anymore. Now if we go back over to the 1-hour chart, we're looking at this bear flag. But now, like, I literally drew it out. I'm like, what I hope happens is this. Now this looks more like there's more potential to it. But I don't know, Powell says something else in 5 minutes, and this might turn into a red candle again. And on the 1 hour, you might have a rejection on the bear flag again. So maybe it's good to just be patient with moves like this. But you understand what we're looking at, right? If we don't have a good move here, if we can't break this, look at this 1 hour bear flag. If we do have a good move here, if we do break it, look at that 4-hour descending Browning wedge. It's really a flip-flop on the 1 hour and 4-hour charts right now. But if you watch the beginning of the stream on the daily, for the most part, apart from like a larger time frame potential bear flag, the daily is mostly bullish variables to me. And that's not going to change at least for the next couple of days unless like we have like a 4% bearish engulfing candle or something. You already have put in most of the hard work on the daily. You already have the 200-day moving average reclaim, the descending Browning wedge breakout back test, this zone reclaimed, potential inverse head and shoulders. Now you're very close to testing another descending Browning wedge, this little white one over here on the daily. The variables are lined up. They are on higher time frames. It's just a question of what do we do on these lower time frames first. As of right now, as we speak, it's trying to break this wedge to the upside, and Keanu Trades talks about this all the time. Breaking a bearish pattern to the bullish side is very bullish. Vice versa, breaking a bearish pattern, or I think I just said the same thing again. Breaking a bullish pattern to the bearish side is very bearish. Like imagine you're in a falling wedge, and instead of breaking out of it, you just break down from it. That's pretty bearish. Like you have to be very bearish to break out of a wedge that is contracting lower. At the same time, you have to be very bullish. And I'm not saying like your mind has to be bullish. I mean, the price action has to be very bullish for you to break a wedge that is contracting higher. Just think about how hard that sounds, right? But you're trying to do that right now. But I don't know if Powell wants to say something else in 10 minutes. We'll just see what it looks like tomorrow. But that's really the main story from today. And yeah, that's what's going on. I don't know what the stream schedule is going to be. I still need to figure it out. But I did have a good vacation. If you always want updates from when I'm not here, join the Discord, discord.gg/freetradingmovement, or follow me on Twitter @championvibe. I was sharing pictures. I don't do this much when I go on vacation, but this one I was sharing a bunch of pictures Started off in Mexico, Cancun. This was the view from where I was staying. And this was Isla Mujeres. Took a boat there. Really nice blue water. I was on this beach over here. Had food over here in this restaurant. That was like the start of my trip. Then I went to Chichen Itza Mayan Pyramid in Mexico. That was really, really cool. There's something about like the steps here. Like if you count all the steps on all 4 sides, it comes out, and like the thing on the top, it comes out to 365, the amount of days in a year. If you clap, the top of the thing makes bird sounds. They used to sacrifice people there. It's crazy. This was a cenote, a sinking hole. Just a little flex, you know, just a little flex for the Twitter. And of course, the hat's right over here. Actually, I tried to take as many pictures as I could with this hat, so we can have some nice ones for the Discord banner. I need to make sure I actually do that. This was at a club. Mexico, jet skiing. I don't know what this was, but it was good. I had on the way to the airport. And then Colombia too. Cartagena. This was the view from the place I was staying at. Some food. Shout out to Cheddar Freeze. Of course, the hat again on a boat in Colombia now. Another picture. I kept taking pictures with the hat. Blue water in Colombia. Hot tub. A little flex with Twitter, of course. And then this was a castle. This day I had so much food, it's not even funny. I probably had over 4,000 calories of food this day. It was actually insane. All I did this day, I think it was last Saturday, was just eat all day. And then this is my new house, MTV Cribs. I'm just kidding, it's the castle. And then this was again the view again. It was really, really nice to see it. And then not yesterday, but Monday I was in Chicago. So this is the Green River again with the hat. You saw I had to switch over from the short sleeves to the gloves because it was cold. This is me. I know in like all my pictures I'm wearing this, but this I went on like a summer trip, so all the stuff in my suitcase, which is literally still right there, it's not even unpacked, is all summer clothes, and this was my only like winter clothes I brought, and it was like 40 degrees in Chicago. Of course, the bean, they were actually shooting a movie. It was called Durango, so I couldn't actually walk up to the bean, as you can see, because let's see if I can zoom in here. No, it doesn't really work. But they were shooting a movie like literally right here. This is where the producer was sitting, so we couldn't actually like go and walk up to it. We had to kind of stand behind these. And then Portillo's, beautiful, beautiful hot dogs. So yeah, I'm back now, but that was like a nice little, some of the highlights. I also went to Miami for a bit, and I spent a night in Columbus, Ohio. I don't know if anyone's from there, but we're here now, and I appreciate all of you supporting me. And yeah, so let's see what goes on with everything. SPY's going even higher right now. We're actually starting to see a pretty decent rally. Let's hope that that line I just accidentally drew does not happen. But new session highs for the SPY. Let's go back over to that 4-hour chart. There you go. Again, we still need an hour and 11 minutes to confirm it. We probably might even need price action for tomorrow to confirm it. But at least right now, again, we're starting to test the breakout. I don't want to get too ahead of myself, right? I don't want to say, here we go, we're breaking out, the pattern's all set. It looks like that for right now, but it's not confirmed yet. So we got to wait and see. But it's a good start. Unless Powell says something not good. But yeah, 4-hour, this is a pretty large pattern. You're testing a breakout of it. There are a decent amount of new swings I just alerted. GameStop, it looks like that's also bouncing up a little bit right now. Kind of created a triangle pattern throughout the whole entire day, and about maybe 7 or 8 minutes ago it just broke out of it. So let's see if this can make a little bit of a secondary move now. It's a very large triangle after a very large gap up. I'm sure there's a lot of people watching this and maybe trading this right now, but it's kind of already broken out at this point. Forward, very nice move as well in the last 10 minutes. About a 2% move higher for that swing. Let's see if Google's almost at that target yet. It's pretty much there. It's almost there. It's so close. It's not even funny. But yeah, we'll see how this continues to develop. That's probably going to be it for the stream right now. I think it was pretty solid. So thank you all for watching the stream. Make sure you join the Discord, links in the description. If you want to join Premium, I'm back. So if you want to join, probably no options today, but I'll probably start tomorrow or the day after, even though the swims have been pretty solid. And the weekly watch list is already out. I didn't even put it in the chat, so I'll put that in the chat right now. you want to join premium, there you go. Pin it in the chat. Just at least check the page out, see if it makes sense for you or not. If it doesn't, that's all good. Yeah, shout out to everyone in the chat. AK, Plebrate, DJ Tardis, Frank, D, Nerve, I am Zeke. Thank you for the support. DJ Tardis, Azvet, Mike. Appreciate everything. So I'll see you on the next stream. Have a great day and peace out.